Hello and welcome to today's edition of Charting the Markets. You're with me, Sean Murison, Senior Market Analyst at IG South Africa. Today's economic calendar, we do have another US inflation print. This time it's the PPI and core PPI data, and that's out a little bit later this afternoon. And obviously measuring inflation at a factory level this time. We do know that inflation data, any type of inflation data, does have the potential to cause some volatility in markets. So do watch out for that. That's early on this afternoon. Looking at some charts and starting off with the S&P 500, we do have a bit of a short-term consolidation starting to form. Some marginal momentum to the upside. Longer-term trends are still considered up, though. We see the price trading above that 20, 50, and 200-day simple moving averages, the red, green, and blue lines on the chart. And we also have that just tentative trend line also drawn in red on that chart. Now, we're keeping a long bias to trade still on the S&P 500 at this stage, while those trends, in line with those longer-term trend assumptions. At the moment, we have had a bit of a reversal. We had a pullback a little bit deeper than we anticipated. We've made a new point as where we've drawn that trend line. But a nice reversal here, and we are testing a resistance. We're about 50 points away from that 4195 mark. Our view is still to buy into pullbacks on the S&P unless we see a deeper pullback in that market. We can keep stops on a trailing level using that trend line at this stage. We're looking for a break above 4195 before we start targeting 4,220 and possibly even 4,325. That's on the S&P 500. Now in Europe, looking at the DAX, very, very short-term consolidation. Looks to have broken out of that consolidation. We are moving up. Now, we have also been keeping a long bias to trades on the DAX 40 or the Germany 40, as we've got it labeled here. And last week, we did talk about this reversal off this low. We've tested this 15,715 mark. We've come just short of that, and we look like we are moving towards that level right now. Again, if you are long already, you might consider trailing a stop loss on the close below a one-day low. Alternatively, if you're not long yet, we're looking for any types of pullbacks from what is now overbought territory once again towards trend line support, possibly looking for that pullback to end with a bullish price reversal before getting long again. And that's still in search of 15,715. Now, if we can close above that, then we'll start looking at that next level. It's about 600 points higher, sitting at about 16,300 on the DAX 40 index. Now, FTSE 100 trading to new high territory. So without even having the moving averages on our chart, we can see it's moving from the bottom left-hand side of our page to the top right-hand side of our page. Clear indication of an uptrend that is in place. We are, however, sitting in overbought territory at this point in time. So if you are long, we're looking for channel resistance as a target. We had a mark there earlier on about 8,185 on that. And if you are long, you could look at trailing a stop loss below a one-day low on that trade. If you're not long yet, I think it might be a bit tricky chasing the market at current levels. It might be preferable to look for a pullback from overbought territory and back towards that trend line support, where we'd start considering those long positions, probably about 7,900 odd. But we want to see a pullback in just with the price ticking back up or a bullish price reversal if you're using something like candlesticks. But preference, if you're not long, waiting for a pullback from overbought territory for long entry and looking for a bullish price reversal close to either trend line support or if you put in a horizontal level of support, about 7,900 to 7,980, depending on how eager you are to get in the market. Now, when you look at Asia, a bit more of a pullback. We're still in that pullback. It's taken the form of almost like a consolidation. When we look at this picture here, we still consider that longer-term trend to be up. These short to medium-term trends are becoming under a little pressure as we see the price starting to trade below those moving averages. But this move lower is a bit of a grind relative to what has been a relatively aggressive move up. It does look to be taking the shape of a wedge, a falling wedge, which in context would be considered a bullish chart pattern. And looking to trade that, you want to see a price closing above resistance of this pattern before starting to target that 22,815 level, so that recent high on the Hang Seng. Now, if we don't have a breakout, we'd be looking to see where this price actually stops pulling back, as we are starting to look oversold at these current levels. We are still keeping a long bias to trades on the Hang Seng as well. And if we do start breaking below the lower, we're not looking at shorting it just yet. We'd hopefully look for some signs of a reversal close to this 20,100 mark for long entry as well. So keeping a long bias to trades on the indices that we've looked at. We do recognize some overbought signals on the US and European counterparts. And preference, if you're not long already, is to wait for pullbacks from overbought territory to join that longer term uptrend. Now moving over to some currencies. Inverse relationship with equity markets and precious metals. You see dollar index or dollar basket as it's labeled with IG. We've had a rebound from oversold territory. That rebound does look to be stuttering in overbought territory right now. So rebound from oversold territory. We are overbought now. It seems to be a short-term high at about 103.70. And we looked like we thought we were having a bit of a reversal there to trigger new short entries because we are still trend following, trading with that longer-term trend. We are not looking at getting long. So if we do end up with a breakout above 103.70, we look to our next level of resistance and wait for a bearish price reversal closer there for short entry, and then obviously targeting our moves lower. This level hasn't broken 103.70, but we do think that over the last couple of days, there's very, very short-term consolidation forming. So maybe for, if you're not short on this, maybe looking for just some confirmation, maybe move below 102.65, but close below there to start targeting a retest of this 100.50 mark on the dollar basket. Euro dollar inverse picture there, where we see we are in an uptrend at this point in time. Longer term, the short term, we are perhaps moving into a bit of a consolidation. We do have some positive divergence forming, and that positive divergence is highlighted with the dotted red trend lines on the price and on the indicator. That is a bullish suggestion, but like I say, we do look like we're consolidating right now. Perhaps waiting for just a strong close and a move, a close higher above that 107.4 mark might be a consideration to trigger that long entry, targeting a move back towards 1.1035. In that situation, then we could look at this reversal low here, about 1.06575 as a stop loss indication for the trade. I think once we haven't, this pullback has moved into very, very short-term consolidation. So I think before we commit to the upside momentum of the short to medium term, we want to see just a bit of a break above that resistance level, like I said. Cable, the uptrend is not as pronounced as what we're seeing on the euro dollar. It's not as pronounced as the downtrend we are seeing on the dollar index. We do have a short to medium term consolidation forming here. We do also have some positive divergence with our stochastic and our price action at this point in time. That we are trading above that 200-day simple moving average, the blue line on our chart. So we are still keeping a long bias to trades on cable, pound versus the US dollar. If this little trend line here, which we're just using to mark divergence, does fail, we'd look for a move closer towards this 1.185. And hopefully if we get a bullish reversal for that level, we'd be looking for long. Where we start to consider changing our trend bias and maybe looking at short positions again, if we start trading below, you can see some daylight with the price trading well below this 200-day simple moving average, but we're not there yet. And so for now, longer term trend is considered to the upside. Short to medium term trend, we see the price whipsawing through as moving averages, is considered sideways. But with those two concepts in mind, we're looking at finding a long entry off current level of support or a lower level of range support, provided that this 200-day simple moving average of price is still above that. We change our bias when we see a move below that 200, or we reconsider our bias at the very least. Moving over to some commodities now, and Brent crude. So we've got this situation here. We've got a longer term downtrend, and then we have this short to medium term consolidation or range type trading environment that has started to form. Now, we've had a nice rebound from oversold territory that couples with news that Russia is looking to curb their output of oil, so less supply to the marketplace being announced to help that little bounce on the commodity. Now, where we are, we're sitting a bit in no man's land right now. I think for us to start reconsidering longs on Brent crude, we want to see us take out this major high, and that's about 88.70, somewhere between 87.70 and 88.70. Ideally, when starting to get long, for me, looking for a break above that resistance and a strong move up, and then looking for the first pullback. Until such time, any types of bearishness or weakness before these resistance levels continues to be shortable. I'd like to see the price just ticking back up and then just ticking back down before that 87.70 level, in which case you'd look at having a close above 88.70 as a stop loss indication for the trade, and then start looking for a move back down to what was that recent turning point, sitting at about 79.50. We are in overbought territory right now, or we're testing overbought territory right now, but I think maybe just sitting neutral for the time being, waiting for the market to show its next hand. Now, gold correction has gone a little bit deeper than we had anticipated, but we were looking from level to level here, and we are at one of our levels right now. So we still consider the long-term trend for gold to be up. A lot of these moving averages is in proper order, although that is going to start to be tested soon if we see more of a correction on the price. But we are now finding support at $1,860 per ounce, and we do have another level there at about 1,820. Now, longer-term trend bias is to the upside, and we are oversold at this point in time. So we are waiting to find long entry onto gold. Ideally, what we'd like to see is if we have a nice strong close here above the halfway mark of that previous candle, we'd have a bullish Harami candle pattern. That would be a bullish reversal, and then we can start targeting at least move towards that 1875 mark, and through there possibly 1905. But we do need that stronger close. If we fail to produce that strong close and we do start trickling down, our next level where we're starting to look for reversals 1,820. So we're not looking at shorting gold from current levels in lieu of that longer term trend bias, but we are looking to find long entry in line with that longer term trend. And long entry is considered on a bullish price reversal at one of our levels, 1,860 or 1,820. We start trading below there, then we're going to wait to see where the price settles. When we start getting, below this 200-day simple moving average, then we could start reconsidering our trend bias to trades on spot gold. Last but not least on our charts, looking at copper. Now, copper has had a very good start to the year. It's had a bit of a nice little rally. From overbought territory, we've seen a correction come back past what was previously resistance and was support, and now resistance again, and then we've moved into a consolidation. Now, we are starting to look oversold at this point in time. We are not looking at shorting copper at this point in time either, or commodity stocks related to the underlying price of copper. What we'd like to see for long entry is seeing a close above that 9030 mark. If we get a close above that, we can say we're moving out of what is a consolidation over the last week or so, just below this 9030 mark, and if we move above that, if we can get a nice strong close above that, we start targeting. We're going to have a bit more of a conservative target this time. We were looking at 9,770, but I think certainly about $9,420 per metric ton could be a feasible scenario. So if we do get that upside breakout, then we'd look at having a stop loss somewhere below this low at about 8,780. If we could instead get a downside breakout, we wouldn't be looking at shorting either. We'd wait to hopefully see some type of bullish reversal at one of our lower levels of support. The initial one being $8,595 per metric ton. All right, that's all the charts from me. I'm Sean Mearson, Senior Market Analyst at IG South Africa. Thank you very much for watching, and do remember to watch out for this afternoon's PPI and core PPI data out of the US.